What is going on YouTube? I am very excited to bring you guys this video. If you cannot tell, this is some information that you guys will find helpful no matter what kind of trader you are. So before we get into it, if you're new to the channel, my name is Tyler. Hit the like button and the subscribe. It really helps me out and it helps to push this video out to more people that at the very least could benefit from this information. So now that you guys have hit the like button and the subscribe for me, let's get on over to what I'm talking about. We're going to be looking at the main article on CNBC. Now I read this whole article and I thought it was very informational and there was a lot of great things a lot of people should see, but then again a lot of people don't like reading the news. I understand that, so it is a lot easier to listen to a video or even listen to somebody explain the video and watch the videos through another video, if that makes sense. So we're gonna get right into it. The title is GameStop short sellers are still not surrendering despite nearly 20 billion in losses this month. So when they're talking about the short sellers, obviously that is the institutional investors, the hedge funds, stuff like that. Melvin Capital, you know, I'm sure you guys have heard that, at least that name alone come into it. So short selling hedge funds have suffered a market to market loss of 19.75 billion year to date in the brick and mortar video game retailer GameStop, according to data from S3 Partners. Still, short sellers mostly are holding on to their bearish positions, or they are being replaced by new hedge funds willing to bet against the stock. Crazy, guys, just crazy. GameStop shares have been borrowed and sold short have declined by just about 5 million over the last week, marking an 8% dip in the short interest according to S3. So GameStop has 65 million shares outstanding. So, you know, 5 million shares that essentially were bought back and aren't shorted anymore. That's a very small amount, and you could see why. This is a tough situation. When people are forcing the stock up through just buying it, which is not illegal. It's perfectly legal. None of these hedge funds and institutional investors can afford to buy their shares back at this price. So they're forced to hold on to it, and then nobody's selling it. So there's kind of a perfect storm to keep this going as long as people have the will to do so. Because I know a lot of these hedge funds, they're not going to want to cash out with these massive losses. Goes on to say the astronomical rally in GameStop has imposed huge losses of nearly 20 billion for short sellers this month, but they are not budging. And guys, this is why we have been selling off so much. This is why we were down 2% across the board. Pretty much everything was down 2% or very close to it. And that's just an unfortunate consequence behind what's going on, and I think it really hits investor confidence, right? Now, hurting investor confidence is bad because people don't have literally the confidence to invest in companies if they think, because some companies are extremely undervalued. Like BigCommerce has a $5 billion market cap, a very low float, and it's only $5 billion. They are way more valuable than that. Certain companies are just super undervalued and they don't get the attention. And then you have companies that are not worth anything that are getting tons of attention. Big money doesn't know where to place their money. Neither does the retail investors outside of these trade groups. Now I'm starting to get off topic and start rambling, but I do agree with you guys 100%. I think it's bullcrap what happened, and that you guys should rightfully take legal action to get what you are deserved of. So we're gonna get back to the article though. I plan to make a full video about that and my opinions fully on the situation.
Well, I mean, Ron, how do you know that a financially distressed mall-based brick and mortar video game company that is widely hated by every analyst on the street isn't worth 21 billion?
Okay, I will say that, you know, as Warren Buffett said at one time, the stock market is a voting machine for a long time. And so the votes are coming in, but eventually it turns into a weighing machine. And unless they completely change their model or do something, that stock's not worth $21 billion.
So, without getting into the weeds again, Kate, they're not just an app or a front-facing brokerage, right? They are subject to a lot of the same rules as the big names they are trying to displace, and it burned them yesterday.
Yeah, Brian, it's a really interesting story because a part of the value proposition of Robinhood and the reason they become so popular is that they're just this simple, democratically accessible trading app where you pay no fees, and you presumably get a swift and attractive execution on your stock trades. And people were taking full advantage of it, as you know, in the last few days, certainly, and weeks. And it's become an immensely popular app in the recent past. But the thing is, they're dealing with people's money here, of course. And in a T+2 or 3 scenario, meaning you get a trade done and then 2 to 3 days go by before the money associated with that trade is wired either in or out of your account and into another account. You're dealing with real cash here. And when volume and volatility spike tremendously, when the flat price of a stock like GameStop is going up to $400 or $500, sort of stratospheric rise, and your traders are really active in that. Now, I understand a lot of people are trading options, which is a much cheaper way to go, but still, that means that the cash you need to have on hand in order to settle trades and make customers whole is much greater, not to mention the regulatory requirements that Vlad was alluding to, whether it's the SEC or their member organization, their clearing organization, the Depository Trust and Clearing Corporation, which is really what triggered yesterday, I think.
I do have to say, though, I agree with Warren Buffett's philosophy, and everybody knows GameStop is not worth these valuations because the stock market is a forward-looking instrument, and there's not basically any growth at this level for GameStop going forward. So we're going to keep going into this article. It says shares of GameStop along with other heavily shorted stocks spiked once again Friday after Robinhood said it was resuming limited trading of previously restricted securities. The gain pushed GameStop's rallying this week to over 400% and this month to more than 1,600%. Now, this is a really cool breakdown of this graph, and I encourage you guys to pause the video and look at this graph and really look at how much people saying stuff has such an influence. Like Elon Musk tweets Gamestock at around $125 and instantly gapped up to over 300. And shares plunge after brokers restrict trading in the $450 range down to about $100, $115, $120, shot up, and then Robinhood lifts restrictions and it gaps back up. So just be mindful. I guess this is something that you guys can try to get ahead of, or at least right when it happens, you know, if you're a trader anyways. This is definitely not a long-term investment for anybody, so don't get it twisted. This is not a long-term investment. If it is, good for you, but not my kind of thing. The video game stock has been the star of the show on the Wall Street Bets Reddit forum, whose membership has grown rapidly to over 5 million. A wave of day traders continue to encourage each other to pile into GameStop shares and call options, creating a massive short squeeze that inflicted pain for hedge funds betting against the stock. Oh, geez. The borrow fee on GameStop stock, or the cost to borrow shares for the purpose of selling them short, jumped to 29.32% on existing shorts and 50% of new short positions, S3 said. Please, who does she think she is? Jeez. Got Luna, and then Neo is the boy cat. I named him, but we had to. It says in quotes, if most of the shorts had covered, we would not be seeing stock borrow rates at these high levels. By now, you'll be able to borrow GME stock at single-digit levels due to an increase in the lendable stock loan supply due to borrowed shares being returned after all the supposed buy-to covers, Dewinski said. GameStop remained the most shorted name in the market as short interest as a percentage of shares available for trading stands at 113.31%. So basically it seems like as soon as one hedge fund gets out, then another one is willing to take the risk, because everybody knows GameStop is either going to $1,000 or it's going to $5, $10, $20. And at this point, shorting it at the high, why wouldn't you short it at the high? It's kind of a no-brainer if you have the time to wait it out and the endurance and the capital. If you short the stock at $300 and it goes to 1,000 and you're down $700 per share that you shorted, you better have the capital for a margin call and, you know, stuff to do, funds to get allocated there. Now, that's why the market has been selling off, because hedge funds have had to cover positions and sell other winning stocks, good stocks, for to cover their margin calls and their losses. And that's where we come in. That's where we can really take advantage of the situation, especially as long-term investors, guys. Do not squander this opportunity to load up your portfolio. This is going to be a great time to load up on the portfolio, load up in stocks and leaps. I really like leaps right now. That's just what I'm buying. I have a lot of AbbVie, Neo, Palantir. I just like Palantir, believe in that company. I don't really trade the Wall Street Bets stocks. I do, but I don't. I do on opportunities I think are good. Like, I played Palantir, but I did not play GameStop. It was too risky for me at $30 a share. I should have went with some options, but I did not. Topic for another video. But it says short selling is a strategy in which investors borrow shares of stock at a certain price in expectations that the market value will fall below that level when it's time to pay for the borrowed shares. So that is all on the GameStop and the shorted stocks updates. We got a lot of information covered in this video, so I hope it can help you guys make some money even into the future in other short squeeze situations. Now, always come to your own research. Some of these experts and everything just are not right all the time, so come to your own conclusion, something you feel happy with. And if nobody has told you, it is okay to take profits in GameStop. Don't listen to people. It is okay to take a profit. You can't be mad at yourself for taking a profit. But with that being said, next week I think the short squeezes will be the center of focus, and we just really got to watch for, does the SEC come out and talk about regulation, because that will not be good for the stock market. And we got to watch for winners and losers as far as with hedge funds having to liquidate positions. We need to see what the hedge funds are buying back into. I think that will be critically important this next week, setting us up for the next couple months to see what the hedge funds are buying the dip on. Literally buying the dip as fast as they can. Now, I encourage you guys to write this down. Write this down to take note come Monday. What stocks are up? And I'm not talking about shorted stocks or short squeeze stocks. I'm talking about Square, or it's not going to be Apple or Facebook, I guarantee. But big commerce for me is one I'm watching. AMD, even Boeing, Disney, probably my number one, Disney. And I want to see what money is flowing into these. I know I'm starting to rant here, but Disney has been on a rampage, and they have been doing very, very well during this short squeeze situation, and they are not getting short squeezed. This is people buying into it. You know, a lot of people with a lot of money are buying into even Disney. So I'm going to make a video on that very, very shortly. That's an opportunity you do not want to miss out on. But until next time, guys, peace out and have a great night.